welcome to the Monday Dividend Cafe. I am your host, David Bahnsen. I am sitting in the Newport Beach studio where the market is now closed, and I've been kind of in combat here for quite a while. Began very early this morning. Actually, things really kicked into high gear last night. I want to talk about what I think is a pretty historical day in the market in a lot of ways. Now you say, okay, geez, this sounds either really good or really bad. Look, the Dow today was up 289 points. So that sounds like a good day, correct? It's one of the worst days in the NASDAQ in quite some time. And at 3:30 in the morning, Pacific time this morning, it was down 1,000 points. The biggest company in the world today, at least it was the biggest company in the world at the beginning of the day, was down 17%, that being obviously NVIDIA. So it was a very big day, and yet, as I say, the Dow was up 289 points, even as the NASDAQ was down 3.1%, and that is only 612 points, I believe, where the 1,000-point futures was where they started off at when I got up this morning. So it's been a roller coaster, and obviously it begs the question as to why and what's going on. So I'm going to tell you all that now. And there may be some things I don't get to today that are covered at dividendcafe.com. I'm going to try to cover all of it here on the video and podcast. But basically, what had happened Sunday was report that the China AI tool, think of it like their version of ChatGPT, because it basically almost is. It's called DeepSeek, was the most popular app in terms of these AI tools over the weekend, replacing ChatGPT. And the reason that's significant is not just the introduction of an AI competitor from China, but that it runs off of one of the lowest quality, or at least lowest expense and intensity chips that NVIDIA makes. And it sort of starts to beg the question, is there really this big need for the much more expensive investment that many are making on the higher end of the NVIDIA, and it's not just NVIDIA, but other chip maker product suites that are relevant to artificial intelligence. And when you can get less complex chips for less cost and still have a high degree of customer satisfaction, that seems like a really difficult fundamental story. I don't know that that's the story. I think it's actually way too early to say for certain that that's going to play out that way. But when you combine a headline like that and some prima facie market events like that with a valuation like the one that companies like NVIDIA had, then you have a high degree of vulnerability. This is a theme, obviously, listeners and readers of Dividend Cafe are well aware we've had for some time. The vulnerability evaluation meets fundamental anxiety, perhaps even fundamental distress reality, and everything hits the fan. That's what happened today. It's a valuation story when there's no margin of error, and then it becomes a fundamental story, and the two combining becomes a problem. So what you had today was treasuries rallying, little flight to safety. The 10-year yield was down 9 basis points. You're back near the 4.5 range. Top performing sector, consumer staples, up almost 3%. Technology down over 5.5%. So flight to safety in treasuries, yes, but really a flight to safety within equities. As a lot of REITs did very well, a lot of the consumer staples and healthcare did very well. And then, utilities is a mixed bag, because there's a lot of utilities trading off of the belief that there's a need for more power on data center around AI. That stuff got hammered today. Other elements of utilities, and more conventional, traditional gas and electric, rallied. So the defensive versus cyclical story was very much on and evidenced in the numbers. Coming into today, the Citigroup panic euphoria model was at a level of euphoria not seen in years. I have to think that came down a lot today, but that was the pre-market print. Inside selling, on the other hand, has been the highest in over a year for the last month. Now, inside buying and inside selling are never a very substantial amount of volume, but it's always worthwhile to point out. Then you have some things underneath the surface in the technology sector that I think speak to more vulnerability. For example, on Friday, it been at an all-time high. That obviously went away today, but 61% of companies were in an uptrend at an all-time high Friday. The last couple all-time highs, you had over 80% in an uptrend. So a lot less breadth and a lot more top heaviness in the tech sector, speaking of vulnerability. People are asking what this means in terms of earnings season, but 78 out of 500 S&P companies have released so far. So I just think it's way too early whenever you're south of 20% that have released results to start making any judgments about where revenues are coming in, where earnings are coming in, where forward guidance is coming in. It's too early to say. So we're going to unpack a lot more of it in the days ahead. But I just think that's the takeaway, that you have a story of vulnerability combined with valuation. The vulnerability wondering if these hyperscalers, do really need to be ordering what they're ordering. Fundamentally, I would add, let's say that goes away. Let's say that these concerns, you go away and we come back to the belief that no, the much more complex chips that a company like NVIDIA really need, and that the hyperscalers, your Googles and Metas and Amazon, Microsoft's, Amazon too, really want to order a ton of, all come back. By the way, there's links on all of these things I'm talking about in dividendcafe.com today. Let's say though, that the narrative kind of returns to something that was pre-today, pre-Monday. You still are dealing with a question that I've been talking about for a long time, that maybe people are going to end up being very happy with the answer. Maybe they're not. As to what the real beneficiaries of the AI moment are going to be in terms of markets, because the story cannot stay those who make AI and not those who use AI forever. Because those cannot continue making AI well and profitably for investors if eventually there's not some using AI well and profitably. So this either becomes an efficacy, efficiency, utility story, or the other part of the story has to unwind. That's the question, and we've talked about it quite a bit here. There was another story yesterday that had the makings of being the big business story of the day, connected a little bit to the topic I had in the Dividend Cafe on Friday about the big torrent of executive orders and the early indicators of policy priorities from the Trump 2.0 administration. But then this China AI story took over the business news Sunday night into Monday morning. But at one point, President Trump had tweeted out yesterday that he wanted to impose 25% tariffs on Colombia for Colombia allegedly turning away migrants that the U.S. had been returning. They had been deported, and that the president of Colombia had refused to take the planes. And Trump said, fine, I'm using tariffs and we're going to get you. And then an hour later, 2 hours later, he had reportedly changed his mind. If there's more to the real story here, then so be it. I wouldn't be surprised if there is. But that was the headline side. And it does reinforce this narrative of tariffs as a negotiating tactic, even a successful negotiating tactic, getting Trump some headline wins. And in this case, again, the appearance of, being able to affect other policy priorities using the threat of tariffs without ever actually having to implement tariffs. On the job front, there were 223 jobless claims on Thursday. That's not a particularly high number. It's been in that range for a while. But the continuous claims were up to 1.9 million, which is the highest it's been since November of 2021. So well over 3 years, highest continuous claims, even as initial claims stay reasonably low. Existing home sales did increase 2.2% in December. That's up over 9% from a year ago. But again, the full year total of 2024 sales transactions was the lowest in 30 years. So we're down about 1 million house sales per year from where we were pre-COVID. We're down over 2 million home sales per year from where we were in 2020, 21, into early 22, the COVID years when there was a excess of activity. Speaking of housing and mortgage and all these things going on with the frozen market, the Fed, the FOMC is meeting Tuesday and Wednesday. You have a Powell press conference Wednesday. You know, those things often go. The futures are basically at 100%. There'll be no rate change on Wednesday. But then March is at a 32% chance of a rate cut then. So we'll see how that goes. That's still, I think another 7 weeks till that comes up. Oil down 2% on the day, still above $73, not a big deal. And I certainly maintain my belief that crude oil production is not the big story of Trump 2.0. The drill, baby, drill, and talking about how much oil we're producing is an easy story to talk about. People understand it. The media gets a good headline. But LNG exports is the big story, and we are out of the infrastructure that we need to be prepared to export more liquefied natural gas. And any efforts from this energy department of the new Trump administration, I think are going to have as a top priority freeing up more LNG exports. It was 1 year ago today that the Biden administration mysteriously put a moratorium on approving new permits for LNG export. That's been reversed now in the first few days of the new Trump administration. It's a story we're watching closely around midstream energy infrastructure. Someone had a question and asked TBG about how yields work when stock prices are going up and down. Do dividends go up and down with them? And what happens to the yield? And if you read my answer at dividendcafe.com, I think you're going to get a better understanding of the vocabulary of how dividends work, how yields work, and what it means philosophically for an investor. It's an important answer. So I'll encourage you listening to check out dividendcafe.com, the Ask TBG today. I'm going to leave it there for today. Available questions at thebahnsengroup.com always. And I'll be back with you Friday in the Dividend Cafe, if not sooner throughout the week, for some What's on David's Mind and Ask TBG in the daily recaps. And of course, my partner in crime, Brian Seitel, will have you covered other days too. Thanks for listening. Thanks for watching. And thank you for reading the Dividend Cafe.